Good morning, traders and investors. Roger Scott here. That's right, Roger Scott here on a quasi-holiday, Monday, July 3rd. It's about 7:14 in the morning. I'm not going to leave you hanging today. It's a half day, but the market's open and I've got a lot to talk about. Before we get there, make sure to like this channel, YouTube Wealth Press channel, subscribe to our Telegram channel, and the most important thing, you can get access to my VIP room for free for a limited time by following the link either above or below this video. If you're watching on the YouTube Wealth Press channel, there's a link that I conveniently placed for you in the YouTube Wealth Press channel below the video, right in the descriptor. Access today at noon. That's right, no cost. Now, let's get into all the nitty-gritty, right? As you can see here, the market's opening up a little mixed. The Dow's opening up a little down. The Nasdaq is opening up a little bit higher, but this is random. Now, I'm expecting that this is the most important thing that you need to pay attention to and listen good. Tomorrow is a huge holiday. It's the biggest holiday of the summer. Most folks are taking off today and coming back on Wednesday and Thursday, which means this week is going to be extremely fragmented. Now, typically when you have a fragmented week, there's not a lot of volatility or movement till the end of the week. So I'm expecting the market to start trading like a normal market, maybe possibly by Thursday or Friday. You're looking for bigger swings, not a lot of volatility, and a lot of false moves. That's what typically happens. So be really, really cautious. Before I get into the fundamentals, I want to talk about technicals because this is very, very important. As you can see here, the S&P 500 actually beat out and took out the previous high. I don't think it closed there. Let's see if it did or not. It actually closed higher, but look at momentum levels. Momentum levels are diverting. Also, see that? Momentum levels can't sustain. Also, look at the QQQ. It had a huge move and it's up higher right now. And what did I tell you last time? I said the QQQ is going to look like it's going to break out and then it's going to not be able to sustain itself. Now, it's going to be very, very difficult for technology to trade higher right now. Let me explain to you why. If you look at momentum levels, this is the last month. Now, technically, look at how strong this looks, right? It looks really, really, really strong. It looks like we're going to do what the S&P did, like make another swing high. But let me explain to you the difference between the S&P and the Nasdaq right now. If you look at the S&P, now listen and pay attention. If you look at the S&P 500 right now, you will see that the S&P 500 has all of these different sectors. So you've got industrial, which is really overbought right now. You've got energy in the short term, which is overbought right now. You've got basic materials that are overbought. The technology sector does not have that. The technology sector is made up of consumer discretionary, infotech, and communication services. And first of all, look at over the last month what's been going on. Consumer discretionary, right, which is one of the sectors. But look what the second, third, and fourth is. Technology and communication services are all the way down here. Last time we made a swing high in the QQQs. Last time we made a swing high in the QQQs, what we saw was, we didn't see this divergence, first of all, but most importantly, what we didn't see is we didn't see these sectors being grossly overbought. They were actually oversold coming up higher. But now if you look at them, look at where we're at. We're back up here, but momentum levels, oh God, why do I have to do this over again? But momentum levels can't sustain themselves. Technology, communication services are all the way down here. So there's less stocks causing these sectors to go higher right now than before. And you will see exactly the same thing with communication services. The momentum levels are coming off. See that? They're coming off without reaching the top. So to me, the QQQ, which we'll look at as a whole right now in a second, doesn't look like it's really, really that strong. It looks like it's right up here. It doesn't look like it's back up here. So to me, there's even less stocks now. Remember, there was like 6 or 7 stocks causing this? There's even less stocks now causing us to go higher than before. And you're seeing momentum levels, I don't know why I have this here, you're seeing momentum levels in the last 30 days come off really hard on technology and communication services. They don't look, they should be like up here right now, not down here. So to me, it's even less stocks suckering us in for this ride up And what I think is going to happen is I think momentum levels are going to give up here and we're going to cool off, and this is going to look like a false top. That's what I think is going to happen. Similarly, in the Dow Jones, see how momentum levels are all the way up here? Look at the chart of the Dow. Look at the chart of the Dow. You can see how it's starting to come up here, but look at momentum levels. Look at momentum levels. Look at where momentum levels for the Dow is right now. It's back here. It's not up here. See that? It already went up here. So, and on top of that, you've got industrial, 96th percentile across the board, 50, and you've got basic materials, same thing. These things look like they're really, really overbought. Looks like it's trying to hit it again, right? But look at this thing. So it looks like less stocks. See that? It's going higher, right? It's breaking up higher. But look at momentum levels. They can't sustain. So almost every sector, when you look at it internally, my point here is this. If you look at most sectors internally versus the actual sector, if you look at it from the number of stocks, there's even less stocks now causing it to go higher than before. And you've got technology and communication services for the last month really selling off. So to me, this looks like a double top instead of a bona fide breakout. Very, 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 very important. Now, before I conclude, I just want to give you what's on the table today and what's on the table this week. We're looking ahead at the latest policy meeting as well as Friday's non-farm payroll today, the reaction from the market. We're looking to see what happens with technology, with Nasdaq rising, giving us the best first half performance in 40 years in this type of economy, which is crazy. You've got an 88% chance of the Fed raising rates, while some Fed speakers are saying it may not happen, which is really, really weird. This week, you've got a lot of data, but remember, it's a fragmented week, and we're looking at the FOMC minutes to see whether what Squirrely Powell said and what he did are two different things. Europe is seeing further evidence of sluggish growth in China, fueled hopes by potential policy stimulus. That would really help. China closed higher amid expectations of further policy easing of the country's central bank implemented prudent policy to bolster economic growth. Hopefully that'll happen. And Japan, listen to this, closed higher as better than expected results from the Bank of Japan, and Wall Street's strong finish on Friday boosted sentiment. A survey conducted by the Bank of Japan revealed on Monday that business sentiment in the country's experienced an improvement in the second quarter, indicating the domestic economy is on the path of recovery, which I think is going to happen, and I think they're going to raise their rates. Tech stocks in terms of auto stocks, Lee, I told you about this stock. I told you about NIO, and I did not say anything about Tesla. But car stocks, exotic car stocks, electric car stocks are up today, so look for that to give the market some upside. Be very, very, very careful, especially this week when you have a very fragmented week, when stocks are making swing highs and momentum levels are not following through. So we could have a turnaround this week. And again, momentum levels don't lie. Technology and communication services have only gained 4.7%, 5.1%, while industrial and basic materials have gained almost double that. So don't think this is going to be a continuous thing. It's not. This is a fluke, and it's partly caused by the fact that interest rates are not going up as fast as the economy is expanding, and the Fed is going to take further action. And these stocks look like they're overbought, and momentum levels have only gotten narrower. So sorry for being a bear, but I'm a little nervous about the economy, especially going into a fragmented week. Now, remember, free VIP room, noon, link on top. I'm going to go through some hot red meat trades today and give you my hit list for the week. Now, as you know, today's a half day for the stock market, and as the closing bell is nearly at 1 p.m. Eastern Time, I invite you to join me live. Yes, live. Well, why? Well, not only is it the first trading day of July tomorrow, and I want to do a deep dive into my number one strategy to dominate July, but I also want to give you our stealth surge seasonality calendar for the month of July. I want to give it to you. On that calendar, we're going to highlight very important dates for the month of July for certain stocks that have shown to surge on the same dates year after year, 10, 20, 30 years. Want to know what stocks go up in July, which ones go down in July? I'm going to talk about it at 1 p.m. today, Eastern time. Make sure to link below. Make sure to click the link below to sign up to save your spots for today, Eastern, 1 p.m., 1 p.m. Eastern. It's Monday. Markets are going to be done. We got undivided attention. I know a lot of you are staying home. It's too hot to travel. Follow along. You guys are going to love it. I'll answer all of your questions. It's happening today at 1 p.m. Eastern time. Have a great holiday week. Send me emails, support@marketgeeks.com, and I'll get back to you. Bye. Have a great half quasi holiday, okay? Bye. And keep your eye on this fragmented week. It's going to be dangerous. I see a banana in the tailpipe coming up, all right? Bye.